What's up traders, it's your boy Snipe back again. Welcome back to the channel. Today's video I'm going to be talking about top-down analysis. If you are a beginner or an advanced trader and you're not trading with the top-down analysis concept, this video is for you. Grab a notebook and a pen because by the end of this video, your whole trading approach will change and you will begin to catch those snipers entry like a pro. Now let's quickly dive into the video. Through our top-down analysis, we always start with the bigger time frame. You understand? And we look to gather the following information. 1. The most important support and resistance levels. These areas represent turning points in the market. If you can identify them on the weekly charts, you will know what is going to happen when price approaches these levels on the H4 charts. So you will decide either to buy, to sell, or to ignore the signal you get from the market. The second is the market structure. The weekly analysis will help you identify if the market is trending up or down, or it is ranging or choppy market in general. You will know what the big investors are doing and you will try to find a way to follow them on the smaller time frames using price action strategies. You understand? So the third one is the previous candle. The last candle on the weekly chart is important. It's very important. Why? Because it tells us what happens during a week and it provides us with a valuable information about the future market move. When you identify these points using the weekly chart, you can now move to the daily chart or the H4 chart and try to gather information such as the market condition. You understand? The market condition. So what is the market doing on the H4 time frame? Is the market trending up or down? Is it ranging or is it choppy market? You understand? Then the fifth one is what are the most important key levels on the H4 or the daily time frame? This could be support and resistance, supply and demand areas, or even trend lines. You understand? So the sixth one, which is the last one, is price action signal. You need a price action candlestick pattern that will provide you with a signal to buy or to short the market. When I mean short, I mean sell. You understand? To either short, you say it's either short or you say sell. That's how we call it in the trade in Forex. You understand? So you either look for these signals in the market. You know, it will provide you with a signal to buy or to short the market. This could be a pin bar or an engulfing bar or an inside bar. You understand? Let me give you an example to help you understand why it is important to adapt to the top-down analysis concept in your trading method and what is going to happen eventually if you do not look at the bigger time frame before switching to your primary chart, which is your lower time frame where you get your entry from. So let's quickly dive into the chart and let me give you an example of how to analyze your market through the top-down analysis. Now this is VIX 50 index, volatility 50 index. So I'm going to quickly do a top-down analysis on the charts down from the higher time frame to the lower time frame on how I analyze my trade through top-down analysis concept. So like I said before in the explanation, if you want to look at the weekly charts, you understand, you first of all, if you want to trade the weekly like for example, if you want to look at the weekly charts, like you open your charts and you're like, this is the weekly charts and you're looking at it. Before you're trying to look at the weekly chart, you must have to look at the H4 chart. You understand? Let's say for example, if you want to trade the H4 chart now, you have to look at the weekly chart first. You look at the weekly chart, then you look at the daily charts. If the weekly chart aligns with the daily time frame, then if the weekly chart and the daily chart align together and also align with the H4 chart, it means you have a good setup and you can make your trade decisions. But if you want to trade the H1 time frame now, for example, you want to trade the H1 time frame, for example, what you have to do is you first of all look at the weekly chart first. You understand? First of all, look at the weekly chart, the daily chart first. Sorry, you get the analysis from the daily chart first. That is if you want to trade the H1 time frame. You understand? You first of all look at the daily charts. So when you look at the daily charts, you are going to align the daily charts with the H4 charts analysis. If the D1 chart, which is the daily chart, aligns with the H4 time frame chart, it's a very good one. Then you also check if the D1 and the H1 also aligned with the H1 time frame chart, which is where you want to be getting your trades from. You understand? Like mostly the day traders, that you do analyze your trades from the daily time frame, like the intraday traders. Then if you're talking about swing traders, then you have to go for the weekly time frame. So for this example, I'm going to use the daily charts. I'm going to use the H1 chart as where I want to get my trades from. So I'm going to analyze from the daily time frame first. You understand? And remember in our explanation where I explained in the first place, I told you about the most important support and resistance level. You want to know the most important support and resistance level in the chart. Then also you want to know the market structure, the previous candle, and all of these things, trend lines. You want to know all of these things for you to get a very good A+ setup. You understand? So now this is what you do when you come to your daily charts on your trades, on your time, on your market, whatever market you're trading on. And this works on currency market also, not just only on synthetic market. It works on currency market also. So this is what you do. Now for this volatility 50 index, the market, you can see how the market looks like right now. So if I may ask, I'm asking this to everyone, to the audience, put that on the comment section. It's just an expo. What do you think the market is going to do? Is it uptrending or is it downtrending? Now that is for that. You answer that on the comment section. Now let's dive into the example right away. Now this is the daily chart. Now this is what you do. Remember to identify if a market is uptrending or if it's downtrending. You look at the lows and the highs, the highs and the lows. That is how you know if the market is downtrending or if it's uptrending. Now for VIX 50 index right now, the market is currently on a downtrend. Now previously the market was trending bullish in this scenario. You can see the market was trending bullish from here. Previously there was the uptrending movement here. Then suddenly the market stopped and is trying to come down. Now you can see the huge black candles, the bearish candles. You can see how they are huge here because the market is currently bearish at this point. So now the market is no longer bullish in these whole levels now. So it's now currently trending bearish. So this is what you do to identify if the market is downtrend or if it has changed trend. This is what you do. Now let me bring this out. Now remember, this is a higher low, and this is a higher high. This is a higher low, and this is a higher high. Then this is also a higher low. So now in this level now where price created this higher low, price failed to create another higher high, causing price to fall down and intercept this higher low. Now this interception now has made price to change structure. They have made price to change structure. Now the market is currently on a downtrend currently because this higher low has been intercepted, and the market went down and went to create another lower high and came down to create a lower low. So now for you as a trader, now you have now identified that the market is currently on a downtrend. So you want to look for your setup. You want to look for where you can enter the market, and also you look for your support, resistance, trend lines, and all of that. So now this is what you do. You now see that the trend is currently on a downtrend. So you want to go to the H4 chart to see if you can get an alignment together with the D1 time frame. So now let's quickly go to the H4 chart. Now this is the H4 chart. This is the H4 chart, and it was said that the market, this was the higher low, and this was the higher high, and market came down to intercept this low right here. So now we want to look for trend line and want to look for support and resistance in the market. Now you might observe that there was a strong bearish move that came down to this point. Now let me show you how we caught this sell right down to this point. Now remember that this was where the market changed structure from. This place right here. Let me make this straight. Okay, this was where the market changed structure here on the H4 chart, also on the D1 chart. So now it has said that as the market has changed structure here, the market is no longer bullish, it's now bearish. So we look for selling opportunity. We don't look for buys anymore, we look for only selling opportunity. Now this is what you will do now for you to catch this move that happened here, and even this move that happened here. This is what you do. Now let's talk about this move first of all, how we caught this move right from here. So now you want to look for your trend line. So now you have to draw your trend line, and remember, for you to have a valuable trend line, it should at least create a two touches whereby you see something like this. This is how you identify a valuable trend line. Now we've got the first touch here and the second touch here. Let me label that so we can easily understand it very well. Now this is it. Now you identify the two touches, so this makes a trend line for you. This is the first swing in the retracement move, and the second swing, you understand, that creates this, that change this market structure. So now you'll be asking, like, why didn't we draw the trend together with these levels? The reason why is because there is trend inside trend. Remember, in trend lines you have trend inside trend, and this is how we caught this third touch here. You don't want to trade the second touch because you need a two touches to trade the second touch. Now this is how we got this third touch right here. Let me quickly show you this. This is how we call this third touch right here. Remember, you have to draw your trend line very well so you don't get it wrongly. So this is how we got this third touch over here. Now you can label this as the first touch, the second touch, because eventually this whole move happened before this one happened. So now let's just first of all talk about this one, so then we'll go ahead to talk about the other move, the other impulsive move. So now this was an impulsive move and a retracement move, impulsive move and a retracement move. So now this is where you want to be looking for yourself from, not here, not here, not here, not here, but here, because you are following the trend. You understand, you're following the trend. So that is how you caught the third touch of the market, and this third touch is also called a sweet spot. You understand, this is where most of us traders, where we get our best selling, where we get our best entry from. In this point you can go ahead to risk 20% of your account. Yes, if you have like $100, you can go ahead to risk $20 on this kind of trade, because this is a good A+ setup for you. So now this is how we got the first touch here, the second touch here, and eventually the third touch where price sold and gets to our target. This is the target. Remember, when you're trading a trending market, when you sell from the beginning of an impulsive move, and you take your profit at the end of the impulsive move. That is where you take your profit. You understand? So now this was the support level, the end of this impulsive move right here. Remember, this is an impulsive move, a retracement move, an impulsive move, a retracement move, an impulsive move that came. So this one now fails to continue to react from this level, and it broke out of it. Why? Because there is another trend line upward. Remember, when a trend got broke, you have to observe very well if there is another trend that the market can react onto it. Now you might ask that, okay, now something happened here, and you might ask that, oh, why do we have to still look for selling opportunity where we've seen that price has changed trend? Now this was just only a retracement move. This was only just a retracement move. Now, something happened here. If you could watch clearly, the market broke out of this high, changing this structure. Now, this is a change of structure in the H4 time frame, but this does not change the main structure, that is the general structure of the daily time frame. If you could go back to the daily time frame now, you could see that this was the previous high here that formed this low. So if this market exceeded this level, this high right here, it means the trend has changed to bullish, but price didn't exceeded that level. It means the trend is still bearish. So now we look at our H4 time frame now. First of all, let me show you how we cut this entry on the lower time frame. Let's go to the lower time frame. Let's go to H1, for example. Let's go to H1. Now, in the H1 time frame now, you see something. Now, we want to align. We've aligned the D1 and the H4 time frame. It shows that the D1 tells us that the trend is currently down. Then that is one confluence for us. Then the H4 tells us that we have a trend line, a resistance trend line right here, where the market is going to fall from. That is like two confluence for us now. So now let's try to add our Fibonacci retracement to see if it will give us another confluence. Of course, obviously, it gives us another confluence. The Fibonacci retracement shows that there is a 61% within the trend line. So that is about 3 confluences we have now. So now let's go to the H1 time frame and see if this aligns together. Now, in the H1 time frame, we have a resistance level. This is the resistance level that make the market sold from this level. And if you check, this is 1% Fibonacci level. It's within this resistance level. Now, this also gives us another confluence, make it 4 confluences we have. So this gives us a very strong A+ setup. So now, where are we going to be looking for ourselves? It's from this resistance level within the trend line. Of course, there was a fake out up here, but the fake out came back inside the trend. Why? Because it was just only a fake out. So now, for me, I take my trades on the 15 minutes or on the 30 minutes time frame. I rarely go to the 5 minutes time frame to look for my entries. So now let's say we go to the 15 minutes time frame now, and we want to look for our entry. Now remember, I told you that when you want to look for your trade, you need a price action signal, which is a candlestick pattern that will provide you with a signal to buy or to sell the market. You understand? And I mentioned that this could be a pin bar or an engulfing bar or an inside bar. And obviously, this candle that happened there, this bearish candle that happened there, was a inside bar candlestick pattern. So you can quickly enter the market immediately the candle closes and put your SL above the high. So you're not going to put it exactly at the top of the candle. You're putting it a little bit, a little pips above the candlestick where you enter the market. So if your SL is to be here and your entry is here and your take profit is here, which is the support, the resistance, the support level, it's a very, very good trade for you as a trader. If you measure from here to here, let's see how many RR you can get from here. Let's see how many RR you can get for here. I think this is about 1 to 5. This is about 1 to 5 RR. About 1 to 5 RR you get from this trade, which means if you risk $10, you'll be making $50. If you risk $100, you'll be making $500. That is the ROR you get from this trade, which is the risk to reward you get from this trade. So you see how profitable this strategy is, how top-down analysis can help you get a better entry. Or let's say we go to the 15 minutes time frame. Let's say we go to the 15 minutes time frame, and in the 15 minutes time frame, it was obviously another same inside back candlestick that happened right here. So that is it. You enter and immediately the candle closes and you put your SL above, a little pips above the candlestick. So that is how you do it. That is how you catch sniper entries. You understand? So now let's move on to the second one, the second example. I told you I'm going to give you an example, but I'm making it to 2 examples so that you get this very, very clear. So now let's just quickly take this off. We've done this one. Let's quickly take this off right away. So that is how we cut this move, you understand? So now, now price broke out of this trend line. It means that this trend line is no longer valid anymore, so we have to take it off. And remember, I told you when a trend line is being broken, you have to look or carefully observe if you can find another trend line that aligns with the daily chart, or if with the time frame you are trading with, you understand? So now we quickly take this out because this trend line has been invalidated already. So now this is the trend line we're looking at now. We got the first touch, the second touch, and this is the third touch right here. Now let me just quickly draw a support trend line below this one. Although the support trend line does not mean anything though, because if you're trading a downtrend, market, what is most important is the resistance level. Same thing if you're trading a uptrend market. What is most important is the support level. The other level does not really matters. You understand? But sometimes you can just draw it there. You understand? To maybe know some kind of reversal that will happen in the market. But the most important thing is, if you're trading a downtrend market, the most important thing you should be looking at is the resistance levels. Then if you're trading an uptrend market, the most important thing you should be looking at is the support levels. You understand? So now let me show you how we cut this entry right here. Now first of all, let's draw out our Fibonacci. Now remember, now we've got the 2 confluence now, which is the trend is down, and the trend line, which is the resistance trend line right here. So now this is what we do now. Now we have to look for another confluence because we need up to 3 minimum confluency to get a good trade, to get a good A+ setup. Now if you could measure from this previous swing level down to this new swing level right here, you could find that this is a 61% Fibonacci retracement, which is a very good one for us. So now let's go to, now it seems like the daily time frame and the H4 time frame align perfectly together, because we have a trend line on the H4 charts. Then the daily time frame tells us that the market is on a downtrend. You understand? So we have our Fibonacci retracement level 61% within the trend line. So that is a very good confluency for us right here. So now let's quickly go to the H1 time frame and see if we could get maybe a support or a resistance level. Now let's just check this out. Let's check this out to see if we could get something here. Okay, it says that there was no clear level in this point. This level is above it. Why this one didn't get to the level? So now let's look at the firstly, the trend is down. Second, we have a trend line. Third, we have a Fibonacci retracement level. Now that Fibonacci retracement level we can find it at the trend line. That gives us a good a valid Fibonacci 61% level. So now this is what you do next. Now once you draw your trend line, now you're waiting for price to approach the trend line where you want to look for your entry. You wait for market to approach the trend line. Now market has approached the trend line in this point now. So now this is what you do. Now you look at the H1 time frame. The first thing you saw was an inside bar rejecting from this trend line, right? So this gives us the signal that this market is going to reverse from this level. So now you can draw a trend line like this. You can draw a trend line like this and simply wait for it to get breakout. You wait for the trend line to break out. That is if you want to play very, very safe in the market. Since you find out that this H1 is trending bullish right here, you wait for it to break out, and this was the breakout. You wait for it to break out. This was the breakout. Let me zoom in clearly. This was the breakout. This was the breakout candle. So the market broke out and did a reversal, did a pullback, testing this trend line that it broke out from, and it sold. So now this is what you do. Now you go to your now it has tell us that the H1 time frame aligned with the H1, the H4, and also the D1 time frame. So now this is what you want to do. Now you want to go to the lower time frame, which is the 30 minutes or the 15 minutes, to look for your selling signal. Now something happened here. What was this candle? This candle was a bullish candle. It was small, and this other candle was a bearish one, although it has a wick above it and a wick below it, but it totally engulfed this previous one. That gives us an engulfing candle. So now we can take our sell immediately the market closes and put our SA above these highs, which is above the high, a little pips above the high. So now let's say we took our sell immediately the market closes in this point. You can see how we cut sniper entries, how I used to cut my, this is a very, this thing I'm giving to you, I give it to my VIPs, but I'm sharing this out for the sake of love, so people can get this knowledge for free. You understand? So now this is how we cut the sniper entry. You can see immediately immediately we sold, the market started selling. So when you get your entry from here, you put your SA above this previous high, little pips above the previous high, or maybe the previous candle. You understand? You can maybe put it here, or maybe take it a bit higher of this previous high. Then your TP will be at the next support level, which is the end of the impulsive move. Sorry. Okay, this is it. Let's use this as the end of the impulsive move. Now you can see that from here where you took your sell to this level, the market was just dropping. This is how we cut sniper entries in the market. Let me check how many RR we could get from this trade. Wow, this is 1 to 7 RR, which is 1 to 7 risks to reward. This means if you were risking $100 in this trade, you'll be making $700. That is a lot of money for a trader. You understand? You know, that kind of money, a lot of people do not make that kind of money in a month, even in 2 months. You understand? It takes a lot of people a lot of time to make that kind of money. You understand? And if you're risking $10, you'll be making $70. You understand? That is 1:7. 1 to 7 risks to reward. You understand? If you were risking $1,000, you'll be making $7,000. If you're risking $10,000, you'll be making $70,000. That is how trading is. Trading is like there's no impossibility in trading. You understand? So I believe this analysis, this topic analysis I just did, helped one of you to understand how to catch sniper entries and how to get a good A+ setup in the market. And trust me, without this top down analysis concept, you will definitely go astray in your trading. You will find out that you're taking impulsive trades, you're selling where the market is telling you that I'm buying, or you're buying where the market is telling you I'm selling, or you're selling at retracement levels. You understand? Or you're buying at where the market is just doing a consolidation. You understand? Or maybe the market is choppy, you're just buying, or you're selling where the market is not at the right time to move for you. You understand? So I believe you got something out of this video. You understand? So I believe you got something out of this video, and please make sure you share this video to someone. Yes, so now we've come to the end of this video. I believe you got something out of this video. We've come to the end of this video right now, and I hope you took down the notes, you took down the necessary notes, and this video helped you in 1 or 2 ways to understand price action and also understand top-down analysis very, very well. So please subscribe and turn on the notification bell for more upcoming videos like this, and share this video with someone you know that need it, with a friend like you, and make sure you comment on this video, like this video, and see you in the next one. Peace out.